Today is August 3rd, 2025. Call it a violent long-term breakdown with a bear trend confirmed off a multi-decade bearish rising wedge setup with Fibonacci zones being vaporized and a major volume flush. You had a clean, big divergent high. You had negative and bearish divergences being constructed on multiple key technical momentum indicators, only increasing the odds for a breakdown sell signal to come. And we got it. Off the breakdown sell signal, you had the violent snapback in her counter trend rally after the Luigi Magelloni catalyst, followed by another violent snapback and or counter trend rally, only to be rejected violently throughout this span of time, where the price has collapsed nearly 16% with this past week alone. The break of the $300 handle triggered a void in volume profile, hence the all-out vertical flush into the 230 realm. And zooming into the weekly, we are honing in on some additional clues here, where the current price is entering a multi-year volume desert, where the next support doesn't emerge cleanly until around the $13 handle, whereas you have a rejection off that ascending uptrend price support level. Here was your first initial leg for 50% crash, and here is the secondary perfectly measured 1-0 fib target for another 50% crash and or flush, which would be a perfectly measured flagpole. You have perfect symmetry amongst some of these fib retracement levels, acting as resistance and now accelerating into some of these vacuum zones. But make no mistake, the price has now flushed through the 236 with no friction. And the next targets align beautifully with the 0-0 base, where momentum is still continuing to plunge to the downside. You have the price percent oscillator deeply within the negative and accelerating, with the price percent oscillator histogram printing consecutive red bars down below its zero line threshold with huge volume spikes. You have oversold conditions there on the weekly, but no divergence or any clear signs of slowing down yet, where the momentum is just continuing to get punished. You have classic collapse velocity going on here with the relative index in oversold conditions, when it really doesn't matter when macro structure is broken. Volume confirms that this is an institutional exit and not just a rotation. What made this stock so special was the ascending uptrend price support level, multi-decade off the great financial crisis lows, that was very sacred to the price action of this stock, and breaking it only confirmed a super cycle rotation out of the healthcare insurance sector as the Federal Reserve dragged the interest rates down for more than a decade. You must think about all of the imbalances and destruction that must have been made throughout that span of time, where this was a generational structure that had failed and back-tested. And what comes next is either a reversion to the long-term means on a 50% haircut from its highs, or a full secular derating. The only viable bullish sentiment I could see coming out of earnings and or guidance or some other macro tailwind could deliver a surprise. Otherwise, this is a don't try to catch the knife zone, as the chart is entering the graveyard of secular leaders here within the healthcare sector.